Hello, Warriors. How's everyone doing? Sinatra, Len, Blake,
Good morning.
AJ. Hey, how are you, buddy?
Good. It's going to be me and you. And I see Steve here. I'm not sure if Steve's going to be around because I know he's in Sparta right now.
Oh,
I just want to say good morning. It's going to be me and you prepping everybody today. It's holidays it's holiday season
yeah,
for most traders.
yeah. Brand, I hope you heal from those someday. Okay, everyone. Uh, Blake, I think we could handle it. Not
Oh,
our
we've done it
first road.
before.
You think we could do it, man?
We've done it before. We'll do it again. It takes us back to the way back, Dale, when it was just
Yeah,
you and me for a lot of times.
yeah.
Way back in the day. So
Dixie is trying to put in maybe some type of double bottom for a little, maybe one more pop. Um, Ryan's not here, but he sure sniffed a trade off in gold. I don't know if he did or not, but it was pretty amazing call he made yesterday. And finally, this is something that's finally happened. We talked about it earlier in the week. So now you could get a real true bull market going if we start, you know, ending this uptrend in the gold silver ratio. Silver's way outperforming gold today. So there's your daily.
and so can you explain really quick, Dale, to the traders at home when the gold silver ratio turns lower like it is right now?
Yeah.
Typically, what does that mean for precious metals? I
Tip,
mean, you say it
typically,
all the time, but not everybody knows that ratio, what it does to precious metals.
well, I guess you could use the word true or classical bull markets in precious metals. Um, Silver outperforms it, the later stages for sure, but this means it's silver, which is look, this is silver's underperformance. Okay.
Yeah,
And, we got to this, just for a little historical perspective, it got way out of whack. I remember a couple years up here. Okay. And it almost looks like the dollar, and then it moves sideways for a while. And
yeah, yeah.
sometimes it correlates with the dollar as well, because gold could go up with the dollar being even in a bull market, but silver I historically needs a bear market in the dollar. So, you know, this to me looks like, we couldn't get through resistance again and we're headed lower. There are people talking, down here where we were in 2011 or so. That was 30. Okay. This is when gold made its last historical high before the last year or so. Okay.
Basically, what you're saying is when silver is really outperforming gold,
Yeah.
this is one of those arguments for a sustained
Yeah.
precious metals rally, and gold could really maybe break out above the highs.
Yeah. Oh,
Yeah,
yeah. And
yeah,
platinum is also something that usually outperforms gold, which it hasn't been doing for a long time. It used to be at a premium, Blake. Platinum used to have $1,000 premium. Now it has, $1,300 discount. So this too could be, one of the sleepers that really kicks in. Palladium's the other one. So, I mean, if we're embarking on a bear market in the dollar that is multi-week, multi-month, maybe even
hmm
multi-year, um, you have to own tangibles. When you think about it, everything we own here in the U.S., if say the dollar breaks down to, 95, that's not too aggressive of a target. 97. That means that everything that you own and you're in the US is dollar denominated, you just took almost a 10% hit on all of your assets. So, people need to diversify away from the dollar one way or the other. You could, it could be gold, it could be other currencies, um, it could be things that are going to hold their value during a decline in the value of the dollar.
Like
So
AMC.
yes, load up on meme stocks so that a lower dollar could propel them because you know it should be bullish for risk.
Yeah, I mean,
It should be.
yeah, and it's funny, people talk about inflation and inflation hits everything. And one of the backdrops for the equity markets in the last year has been just a rise in inflation. Now, it's funny after this week, you read from all these economists, and
Yeah,
there's a lot of people
we
saying that,
beat it.
yeah, we've done it. It's over. I
Yeah,
don't know if it's over, but a lot of people are calling the top. Inflation's done. Stick a fork in it. This is it.
they should
Maybe,
go
maybe
back to the
not. But
70s. We
right,
had mission accomplished
right.
twice. Okay,
Pulled the George Bush Jr. Card
yeah,
right now. So
yeah. So we won the battle. Okay, and that's why rates are coming down. This is what tells me we haven't won the war. Okay, and even during a war that you lose, you could win some battles, right? I mean,
oh yeah,
the Union and the Confederacy. The Confederacy won some battles. So even if yields, which look like they want to bounce again, get to like some targets that they did seem real aggressive. But we talked about this descending triangle here. I don't know how long that once we took out 420, look out. But when you look at this, even if it pulled back to three, what is that? 38% retrace of this. So, this is not the all-time high in rates, for this cycle, in my view. This is a little cyclical correction in rates, but it doesn't mean that we can't go down here and then the victory that we had over inflation changes, especially if there's an oil shock. And I know they took WTI down a little bit, but look at how it held the monthly, and I thought we might get back down to 76. 83 is a breakout, and we got back down to 77. So I still think there's a chance. I mean, isn't it surreal to just be sitting around waiting what could turn into a regional war in the Middle East? I
yeah.
mean,
If
we're sending a lot of naval power there. We pulled them out of the South China Sea to move them into the Gulf.
Right. Well, yeah, which is a whole other issue in itself.
Well,
But
that's oil. That's inflation.
yeah,
If he could be claiming victory, and if this formation ever fulfills itself, Blake, it's 113 is the measured move on this. Okay,
and that if you want to talk about one thing that will kill the consumer, that's it right there.
it's
And
not a new
that's
high.
usually the recession starter anyway. It's
Yeah,
higher energy costs.
Mr. Chandler says almost every recession since I forgot what date was preceded by an oil shock. So you're right. That would probably be the last nail in the coffin for people maxed out on cards.
Yeah.
So anyway, a couple of things to think about. You see anything that you want to do today that is really compelling?
Yeah, well, let me know when I can take over, and I'll take over the charts here.
Okay,
Um,
you could take them.
Okay. One of the things that I think that we should be paying really close attention to. Well, first of all, in case you missed it and you're wondering why stock market futures are up this morning, it's Walmart. If you look at Walmart, they beat, and the stock is up. I want to say 6%. Let me double check that. Yeah, I mean it's up 6, almost 7% this morning. Walmart, they reported, earnings, obviously good earnings, but more importantly, it's their 2025 adjusted earning per share outlook was raised quite a bit. Walmart has got the Pep Boys, AutoZone, kind of recession proof uh, situation going on. Walmart's one of those stocks that tends to do better in recessions. It's interesting. I like real close to where I live. I have a Walmart and a Target that within throwing distance of one another, basically, because they're obviously competitors. But Walmart tends to get a little bit busier during recessionary periods, and and I think they tend to do better. And so it's going to be a stock that I want to a little bit later today read on some of their findings and when I get an opportunity, because those earnings just came out a little while ago. So that's something we should be keeping an eye on for today. It's one of the things that's going to keep equity markets kind of higher. A couple of things have happened overnight, Dale, and yes, like if there's something that I really want to do right now, Australia's jobs report came in strong. They full-time employment was higher. They creamed the jobs number. It was, but unemployment was a tick higher than expected. But that didn't matter. Everybody looked past that, and they looked at the employment of creating. I think they created 58,000 jobs, and the market was looking for 20. And then there was a revision to the previous month, which was also higher, 53,000. Lot or 52,000 something or other. Anyway, good jobs data, and the Aussie pushed right back up towards trend highs. Now, this is a really big level of resistance as far as I'm concerned. We have the 50 DMA here, but you'll notice that this really huge pivot in the Aussie held, and that's critical. Now, I am short some Aussie dollars. I'm short Aussie yen, not Aussie uh, against the dollar, but I am short some Aussie yen because it's something I've been playing for the last week and a half or so. But you can't ignore the fact that it's stronger and equity market futures are stronger. So, if we do see some dollar weakness today, Dale,
Yeah.
you've got the euro that's attempting to break out. Now, I'm going to show you just a couple of charts that I think are important. So you got the euro that's got this bull flag pattern and almost completed yesterday, which would complete around 110.50. You have the dollar index. Now let's take a look at the dollar index. The dollar index is at what I consider major support here. We have this, this is the dotted line, right? This is our triangle, but we are also below a multi-year trend line break, which has kept us bearish, the dollar, all week, really the last week and a half. So we've been below that blue trend line you can see there, but we really need to get below like 102.15 or so to turn bearish. Could happen today. Remember, we have weekly unemployment claims. We have retail sales data.
Yeah.
I think I shouldn't
Retail
say that.
sales is the important one.
It is, but the market's very focused on unemployment claims too, because
Oh yeah.
if we get labor is really important for the market because they know the Fed's focused on that. And if these weekly unemployment claims, which is the most real time data that we get from labor data that we get here in the US every week. So if that number comes in closer to 250,000, that's kind of the level that everybody's worried about. If you look back and go to last year, go back to 2023. I have to go really far back here on these weekly unemployment claims. You have to go back all the way until last summer when we got up towards 250, 260, and that freaked the market out, right? Right here, back in June of last year, you can see we were getting above that, 250 mark, and that had the market, on its on
We're
its on
overheating.
its back foot, you know, and that's what we're looking for now, because you can see we're nearing that 250,000 mark, and we have been this summer. So we get a sustained break above there. It's almost like a break of resistance if you're looking at a chart. So everybody's focused on that. And yeah, I agree, Dale. Retail sales, people are going to be watching retail sales very carefully, especially with this, year and a half of really sustained inflationary pressures, how are consumers faring? And that's why I'm going to go back and read a little bit on, some of Walmart's commentary a little bit later today. I'll spend some time doing that. But that data could really move the needle. And when you have the dollar index sitting right on support, you know, that's important. So, we could get a big pivot from these levels. We can get a big breakdown in the dollar, and you can see the euro. I think if the euro takes out 110.50, then you got to be looking at the Aussie. You could be long euros, yes, but look at the Aussie. I mean, the Aussie, don't forget, Dale, this was a bullish outside week last
How
week.
could I forget when I forecasted it before it happened?
Yeah, I mean, look, it dipped there, bullish outside week. Here we are, still creaming higher. So
No.
you got to respect that, right? I mean, you have to respect what we're seeing here. And again, if the euro, sustains its breakout, the Aussie's going to probably follow through, especially with that strong jobs data that we just got. Um, Other things that we should be looking at. Norges Central Bank. They kept their rates unchanged, and you can read it right here, guys. Just on ForexAnalytix, Norges Bank sees rates likely to be kept at this level for some time. I mean, we just got a surprise cut from the RBNZ this week. A lot of people say it wasn't a surprise, but look at the response. It was a surprise. Banxico, they just cut rates last week. Right. People are looking at the Fed. I was just reading Wells Fargo research yesterday, expecting from the RBNZ 175 basis points of cuts throughout the next year to the end of next year. I mean, that's a lot of, and then you got people here in the US saying that the Fed may cut 75 basis points by the end of this year. So when you have all these other central banks cutting, and then you got Norges Central Bank, they're like, yeah, I don't know about that. I don't, maybe not. Well, couldn't
I
that
want to
be?
know why the market is so focused on the Fed easing. It's a lay down. The market, the 10-year yields, did the Fed's work. All they're doing is when they ease is agreeing with what the market did.
And here's the thing, Dale. We are, and I'll just take everybody over to the 10-year really quick, and we can look at everything else, but yeah, you're right. I mean, look at yields. They've dropped, and we've had the 10-year, I mean, here's your notes breaking out. We were very bullish here over the last couple weeks. You can see the ZBs have broken higher. You're right. Yields are doing a lot of the dirty work for the Fed, and we are in an election season, and so many people are adamant about the idea that the Fed's going to cut. That the Fed's going to cut next month. I'm still in the camp like prove it. I don't know if the Fed really wants to do it. I mean, they want to, yes, they want to cut and bring rates down to what the market feels is nominal, but at the same time, they do not want to look political, and they will, no matter how much next week in Jackson Hole, no matter how much the Fed chair says, if we have to cut rates, it's not political. They will be looked at as political, and they don't want that. I'm still not in the camp, but
There'll be
next
a
week's
bloodbath,
Jackson. Go
Marcus,
ahead.
if they don't cut, like Blake is saying, and I've heard this argument here that they could disappoint the market, be a bloodbath if they did that.
Yeah, and it's entirely possible. I think we'll get a better sense of all this next week. And I know there's a lot of people on holiday. It's the last couple weeks of
Oh,
August.
Jackson Hole next week,
Jackson
right?
Hole, we got a lot of
Let's go up there and cover it live, Blake.
I
Sounds
would
like
love
a
to.
great spot.
Get me the hell out of this,
Yeah, me and you, we
the-
deserve it. Let's just
right.
charge it to the company and go up
There we
there
go.
and live it up.
Actually I'm going to charge it to Steve Vogie.
Yeah,
we're gonna put it on
we
his
should
credit
charge
card.
them for taking all these vacations.
That's right. That's right. Those damn Greeks, man. I
Okay,
tell you.
well, let's go cover that meeting in Jackson Hole. All right.
Me and you, kid. Me and you.
All
All right,
right.
let's talk about the S&P and where we're currently trade. I mean, I'm, I was this on the week ahead video. I'm like, okay, if we could break above the 50% retracement, which is previous support right
Yeah.
here, we'll be at the 618. We're there. We're
Yeah.
slightly above it right now.
Yeah.
I have to say this, Dale. This is very critical resistance. This is kind of
Yeah.
like do or die for the market. I don't have any skin in the game as far as being long or short uh, the
I have a
equity.
little, but not the same extent as July.
So are you
Uh,
short or are you long?
I bought some trip SQQQs yesterday. I know Saloom. Hey, what it worked pretty good last time. And
So I
Saloom,
mean,
I have some advice for you. I saw your X handle. Don't call yourself a guru. Let others call you that. Okay.
good point.
When you call yourself a guru,
You're not a guru. I
that
mean,
that has to come from other people.
that's a fact. That's a
All
fact.
right. Anyway,
Yeah. Anyway, look, we have the S&P right at resistance. This is a do or die level. I mean, it is. I'd rather react from here. I'd rather see what the market's what where its teeth are at. Dale, you're stepping in on the short side. You do have the 50 DMA. There's a lot of resistance. I see the reasoning. I mean, really, from as a trader, what we have control over is we have control over our risk. That's it. Period. End of story. Like, so when I sit here and go, okay, I'm going to short the S&P right now, put my stops above 5,500, that is controlling your risk. I mean, you have control of that. Everything else is, you know, it's gonna the market's gonna do what it's gonna do, and either you're gonna be stopped out or you're gonna be right. But if you can get your risk as tight to the current price as possible, like I mean, if I was Dale and I'm like, okay, I'm gonna be short, I don't want to be short above 5,500. It's obvious, right? You get
yeah.
above the 50 DMA, you're above that trend line, you now are simply have cleared the 618. You could
I'll
take a
put
flyer
more
here.
on at your 78.6 level
What's
too.
that?
I'm scaling it, so
Oh,
I'll put some out more out there, and I'm wrong over the highs.
all right. Well, so you're playing this more longer term above the highs. Okay. I mean, but
Yeah,
that's the thing is you've defined your risk, and that
yeah,
is good. Not everybody needs to realize that that is what we ultimately do control as traders is what our risk is. To a certain extent, obviously, you got slippage and you got gapping if you're trading equities, but whenever I can look at something like I'll give you a perfect example today, which I don't think I'll sit here and tell you this right now. We are real key support on the US dollar South African rand. Like
wow,
I can obviously see it. This
yeah.
is a daily chart and higher lows all through here since June. So really all summer. And if it breaks, it breaks. It's probably going to be fairly aggressive. So, but if you want to be long, there's probably no better place to be long, right? You look at situations like that, and that's how you have to, come to the conclusions, and hopefully you have a macro backdrop that supports whatever decision you're making. So I mean, there are a lot of currencies that are nearing really key levels of support that, if they break, they break. The euro, we're right up against resistance.
The
We're
dollar has spoken.
the dollar, well, it has spoke. I think it's going to speak a lot in the next 6 or 7 minutes or so. Speaking
Okay,
of which, let's take a look. Just I'll give you guys a quick view. I know Dale talked about it already, but let's look at gold. I mean, gold, I see it as this, ascending wedge.
wedge. Yeah,
Yeah.
nice.
Now, that doesn't mean that we can't break out and it could get an accelerated move. And
Yeah,
this wedge it ends up being more of a channel. But right now, you got to be respectful that every time it hits highs, a new
Yeah.
all-time high, it gets
Yeah.
sold. That's an ascending wedge in a bullish market, which is actually a bearish sign
Yeah.
if it ever breaks down.
It's
If
a
it ever breaks
reversal
down,
formation,
it is. That's correct. So
rising wedge.
again, I'll reiterate: every time that it hits new all-time highs, it's sold. All-time highs sold. And if we hit another all-time high, sub, well, we can call it 2,500, and it's sold. I wouldn't want to be long if it breaks that lower trend line, because that is, as Dale pointed out, a reversal pattern. Now, as Dale mentioned a little bit earlier, the silver gold ratio is much better today, which is supportive of precious metals rally. And I sure as hell don't want to step in front of gold. Why would you do that at all-time highs? We're at all-time highs, which means it's a bullish market, right? But at the same time, you can't ignore what you're seeing here. You can't ignore that it does have a setup that would be a reversal pattern should we break back below 2,400. I don't think that's going to happen today, but it's worth noting. It's those are the things that you have to have a little bit of awareness. Copper's been, under pressure, but we're back at the 200 DMA today.
Yeah.
Crude oil, I know we posted that on ForexAnalytix. We're basically at resistance right now, and I don't know who the hell would want to be short crude in this environment. But crude had a big rejection of 80, and we get much above 80, and as Dale points out, it could be a really really nasty move higher. Dale, we
Yeah.
got just a few minutes. I'm going to get ready for this weekly unemployment claims data to come out. Anything else on your radar that you think we should be looking at?
Well, yesterday, the day before, Shar Girl talked about copper. So she
Hmm.
was bottom picking it. Nice call, Tracy. And, just keep selling rips, welcome dollar rallies as selling opportunities for a long time. Okay. So, stay short the dollar. You pair some off, like I paired some Aussie off. It's higher than where I paired it off. But any break in Aussie, if we get one more break towards 65 or so, add on. So, if we have a pop in Canada, add on. So, I mean, you could throw a dart. Now, Blake's talking about Norway. Look at SEC, USD SEC. You can throw a dart, and most currencies are going to do better against a dollar. So
Yeah,
stay
and
with
and
that theme.
and it'll be interesting to see, especially I think what we need to see, to be a true dollar bear at this point in time. I think what we really need to see is we need to see softening
Of the
economic
economy.
data across the board, and obviously CPI and PPI this week has proven that inflation is obviously disinflationary pressures are still there, but our jobs market continues to be very strong, any which way
Yeah.
you slice it, and so that's the data that I think really needs to be watched over the next coming, I would say, month or two. So let me get over to the charts that we're going to get set up for today. So you can see yields are off here to the right. We're going to have S&P right in the middle, and then I'm going to put the dollar index, since we're looking at dollar centric data coming out. I'm going to put it here on the left, and put it on a 15-minute chart. And Dale, what I'm going to be looking for today is I'm going to actually be looking at the euro, and I don't have any euro exposure at the moment, but the euro back at 110.50 is important to me.
Yeah.
The euro back below like 109.80 is really what I consider very strong support. And if you read ForexAnalytix basic technical analysis, you'll know that, because that's, I upload that analysis every day. So I'm looking at
Yeah.
109.80. I'm just letting you guys know, because cover like 30 instruments there. Here's your data flash. You're going to see the instant reaction right here. And stand by. We're just a few seconds away. Here we go, about 20 seconds away. Dale, any last minute commentary before we go?
It was fun just doing it with you. And we
Yeah, it was
made it.
nice.
We
Like
made
old
it.
time. Oh, we made it. Yeah,
Uh,
we're almost there.
Funny how fast 30 minutes could blow by.
Goes
Just
really
just having
quick.
a conversation about um, you know, these are like our wheat fields, so we're trying to harvest. There you
Wow, look at
go.
that
There's the
strong data.
numbers.
Look at that retail sales. Holy crap.
Wow,
And
that's a
look,
surprise.
and stocks are loving it. They're McLoving it. Look at the move in the dollar yen spiking up towards 148. The euro is
Okay,
getting absolutely creamed down to support. See, everybody
this
was
is what you're
really,
looking
really,
for.
really very you know, bearish the dollar. And here comes the data. Look at the jobless claims, better retail sales so strong, Empire State Manufacturing strong. And, look at yields. Yields are ripping right now, right? I mean,
Yeah.
yeah. Yeah, I mean, what can I say? I mean, yeah, everybody was short the dollar.
I
I'm actually
wonder,
gonna
will people pull in their call for an emergency rate cut now?
yeah, that's so ridiculous. So ridiculous.
Oh,
Um,
intermeeting, please. We
yeah, we need a rate
we
cut
lost five
now.
percent in
Yeah.
the market. Help us.
Yeah. So anyway, stocks have broken higher. Just a little heads up, guys. We have the S&P that is above, that 618. We are running right up against the trend line right now. Yeah, be careful with the dollar. I mean, obviously you guys were, I say you guys, the market's very, very bearish dollars right now. And you can see the euros right back below 110 right now. So,
Okay.
and with that being said, one thing that we are getting, and this has been a summer of volatility, Dale. So if you guys
Yeah.
are not familiar with the
Summer,
trader
it
funding
lasted
program,
24 hours.
yeah, it's like the markets are moving. But I need to say this. Um, and I filmed a video yesterday. I'm gonna have to refilm it again today. Last month with the trader funding program, we did something pretty cool with our traders. Anybody that took a trader funding program did a one-on-one session with me, one-on-one consultation. So moving forward, we're going to do that with all new traders in the trader funding program, so I can kind of onboard them. That meaning, tell them what to expect, in the assessment process, that type of thing. If you have an assessment that's over 100,000, so you're trying to access like 100,000 or 250, half a million, a million, whatever. If you fail your assessment, I'm going to meet with you and go through like kind of one-on-one. Okay, what happened and how can we, try to figure out some ideas on how you could pass an assessment, if you have to retake it, because sometimes people make mistakes and they're like, oh, the next time around I should approach it like this. We'll talk it out. Individually. So anyway, that's something that we're doing with trader funding program moving forward. It was a huge benefit to our traders just meeting with me and being able to talk through some of the specifics. So anyway, you guys be careful with the dollar today. The dollar is obviously coming off of some really, really critical support here and catching everybody off guard. So Dale, I'm going to pass it over to you. I know you have a interview, so have a great
Okay.
interview. And it was nice being with you today.
All right, Blake. Thanks a lot. Nice coverage today. So, the stellar rally doesn't bother me. This is going to give you a chance to build short dollar positions. Anyway, JJ,
Coach, how
welcome
are
back.
you?
Hey, good
Thank
to
you.
see you, brother. How are you?
Good. Great. How are you?
How'd you handle the turbulence on the way down? And
You
is there any supply off your market profile from what happened 2 weeks ago, or was
let,
that
let,
just a
let,
little
let's take
dream?
a look. Let's take a look. I call this the great margin robbery of 2024.
Okay.
Yeah, and it's good to be back. Thank you so much for having me. Um, it's an interesting market. The flush down. I did not take the flush down at all. When I see moves like that, um, on the last trading day of the month, we had a very, very unusual trading day, and I told people, "Hey, something wicked this way comes. Just get out of the way." My room is full of generally smaller size traders, So, and a lot of them are learning, so they don't really have the skill to handle that kind of stuff. And then they raise margin, right, to 100% margin. So that takes a lot of the futures traders out. So we just kind of sit back, let the market kind of settle, find a bottom, and boy, did it ever. We were putting in, what is it, 6 or 7 or 8 all-time highs in a row. Then we just ran out of buying and just sold it right back down to cost basis. Our cost basis was 51.02 to 51.90. Beautiful distribution up to 57.20, and then sell it back down, put it on sale, hit that 200, shut off the sell, market comes back up. Tons of people short under 5,300, tons of people short under 53.65, and they're pushing the market higher right now. There are areas of inventory that we should be seeing resistance and we're not. So once again, this market, um, you know, COVID was the great margin robbery. This is kind of the smaller one. People who pay, for their stocks, own them outright in cash, they held. People who were trading swing positions using margin accounts completely wiped out. So yeah, right back to where we started almost. It's an interesting market. It's a very interesting market. Uh, the way that we don't have a lot of supply is something I haven't seen in 31 years.
Okay, so now we're into the trapped long inventory.
Yes, sir. We have from that day that we dropped down, we have what we call single prints, which are these single letters between distributions. So we had 1, 2, 3, 4, 5 distributions and 4 sets of single prints, and we seem to be chewing through them. We're expecting to see more selling when you come up to that end, that area, because you'd figure that there's some dealer inventory, there's some stock in the shelves that'll act as resistance. We're seeing a little bit here at the 55.18 level, but we're past this purple line. If you combine all these profiles, that's the big cost basis, and we just went right through that. So it's fascinating. I think the flush down really took a lot of overhanging supply out of a market. It's like when I would be cleaning up a stock and we'd bang it down from $6 to $1, buy everything under $1, and then when you took it right back over 5, it would just go through 5 like a hot knife through butter once you'd taken out the overhang. And this market, we've got a gap, we've got poor lows. These are very, very really obvious places where people are trapped short. Gaps up or a lack of supply.
Okay, so you doing anything today? You faking it?
Uh, no, 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 no. What we do is we use a 1 minute chart. We come up with these balance zones, and we just take trades using them. I don't try and capture the whole move. We trade, like I say, I'm more of a blue collar trader. We'll be taking trades like when it looks below 54.74. We
Okay, what are
come
you looking to do now, though,
right
JP?
now.
I'm sure you're
Oh,
stalking something
sure. Oh
that
yeah,
you'll
yeah.
be
Yep.
that
What
you'll
I'm
be
looking.
looking to do. I mean, it's
Yep.
great to talk about the history.
Yep.
I
Yep.
could talk about I sold the
Sure.
top of NASDAQ
Oh
and
yeah, yeah, yeah. No, okay. So
here's a
what I'm looking
buy.
for now is I'm looking for the market to establish a sideways pattern after it stops moving higher, right? I'm not good at trading breakouts. So what I do is I'll trade a balance area. If it breaks, I wait till it finishes breaking out and it starts distributing. And then
Late
I'll
start.
find it. Yeah, and once I find a two-way trading balance area, then I can trade the back and forth of that, because then I know where I know where the limits of my sandbox are. Uh, Trading breakouts, I've never been able to do because I've always been schooled to sell size into a breakout. So I find it difficult trading it as a retail trader. So that's why, I think of this as the warehouse. Wait till we get to Walmart, trade it here, trade it here. But I do not have a plan to trade this actual part here.
Okay. All right. So you're just hand sitting.
Yeah, right now I'm just sitting. I do a lot of, I only take 3 to 5 trades a day. So I usually do a lot of waiting, and then I have, two major setups: to look below and fail, to look above and fail, and I'm looking for some sideways action now. and we'll see, we'll try and find an area where we get rotations. And once I find a nice rotation, I can just trade it back and forth.
Okay. Let me ask you what your impression was of what the VIX did in 24 hours.
Not being an expert on the VIX, I really, you know, I look at volatility as order flow. So when you have news or you have large orders entering a market that has thin order books, especially at night, um, volatility goes crazy because the order book's thin and the market just drops levels, which creates more selling, creates margin call selling. So I look at it from that point of view. I'm not a VIX guy, unfortunately.
Okay. You didn't think it was unusual.
Well, I later on I found out it was unusual, but I wasn't watching it at the time.
Yeah.
I was watching the order flow on my levels and telling people to get the heck out of the way and not try and buy the dip because I knew there'd be margin call selling.
Okay. All right. What else is on your mind?
Right now, just looking at, some of these, I just watch the usual stocks for clients, the usual Nvidia, Apple, those kinds of the popular stocks. But as you know, I only trade the ES. So I trade one thing. I teach people how to trade one instrument, learn it well, and focus. So, I'm a day trader in the ES. That's what we do. So, we train people how to manage risk, and that's what we do. So we'll be starting our Zoom in about 20 minutes, and we prep people for the market. So now that we see the inventories underneath us, right? It's very hard for a lot of retail traders, and that's how they get trapped is they try and short or fade a move, and they're fading the front end of the move, right? Because there's no competitive selling yet. So it's very hard to short a market
Where's
when
all the trapped inventory? Don't they want to get out?
that's where we're right in an area of trapped inventory right now. So the top of that area, sir, would be 55, 23 and 3/4.
Okay.
Yeah. The next area of trapped inventory will be 28 and 3/4. And there'll be stops up there as well from back in this on from the first. So for
Okay.
example, if you were, people who really need to take a or try and fade a market, the way we would structurally trade this is if you were shorting, say, 19 or 20, your stop would have to be over 23 and 3/4, 24. Because if the market chews through this chunk of inventory, then the sellers don't have to compete and they're lifting their offers.
Okay. All right. So August, thin month anyway, right?
Yeah, it is a thin month. A lot of people are away. Um, I think, the selling caught a lot of people by surprise, and the nature of it, and the size of the ranges, I think, got a lot of people upside down, and so I think there's a lot of hesitation, you know, from larger, if sort of investment money. Maybe they're waiting for the market to stabilize. I'm pretty surprised at the magnitude of the rebound. I thought we'd kind of go sideways for a little bit
Yeah.
to absorb trapped inventory a little bit more, but this market has a very annoying habit of shutting off the supply just when everybody gets short. We've seen it
Okay.
time and time again,
All right.
and we
Yeah.
didn't see
So
a lot.
I
Sorry.
mean, your gut telling you new highs?
Yeah, the way it's trading right now, I mean, you look at the large investment managers. Okay, Buffett sold what, 400 million shares of Apple. But that stock's doing pretty well. It's, it could be a lot worse. It's back to that 223 level.
Yeah.
But you haven't seen BlackRock, Fidelity, you haven't seen any of those cats come out of any size positions in any of these companies yet. So, you know, I think the market's absorbed the selling really, really well. Um, and I think the large size investment managers, the $1 trillion players, because they've paid for those positions in cash, They're not subject to market call. So that, and they've got like a 20, 30-year outlook on a hold. So a lot of that stuff doesn't come out. That's why I think we get these rebounds that are so sort of fast and furious,
Okay.
massive shakeouts.
All right. You want to show people where they could find you? I see you're pretty active on X.
Yeah, I like posting charts quite a bit. I'm VWAP Trader 1, and here we are. And our website is microefutures.com. So that's our website. We've got a trial, so come say hi. And that's me at VWAP Trader 1. We have a calm room. We like to teach. We like to help people get profitable, and we like to help them manage the risk in a practical way.
Okay, JJ. What kind of cigar are you smoking in that picture?
Yeah, that's a
Everyone,
picture of
that's JJ. That's what he looks like right there.
yeah.
So you can understand why people listen to him when he teaches. All
Well,
right.
if I actually put a picture of myself up there, it'd break the camera. So I've got to be creative.
All
Yeah.
right. Well, have a great rest of the summer, JJ.
Thank you so much, Coach. I really appreciate it.
All right,
Have a
buddy.
wonderful summer.
Okay.
All right.
JJ, you can
Thank you,
find him
sir.
at VWAP Trader 1 on X. Runs a room, trades some micros, and has a lot of experience to help you stay out of trouble and trade defined ranges and not just any kind of emotional or any kind of what they call that kind of trading, impulse trading. No impulse trading, always a
Oh,
plan. All
indeed.
right, everyone, that's a wrap. You could join the team in, I don't know, about 20 minutes on the morning edge. Good luck today. You're welcome, Adam. We'll see everyone for TGIF. And don't forget, don't just count your pips, count your blessings. I know JJ does. Don't you, buddy?
Indeed, sir. Indeed.
And, trading is what we do, it's not who we are. And appreciate you guys keeping everything respectful during the session and treat our guests with that type of civility as well. They're coming here, so maybe they do have an axe to grind, but they're just, laying it out there for you to consider. Maybe your style is to be a day trader. Okay. And Jack Schweiger said, everyone has to find a style that suits their personality. So if you're still searching, this could be for you. That's why we bring guys like JJ in, not because we're afraid of losing a subscriber. Okay. So that's a wrap, everyone. Good luck. And we'll see you tomorrow to wrap the week up. Adios. You're welcome, everyone. Thanks again, JJ.
You, sir.
All right. Dax is retesting neckline. Thanks, Khalid. See you, Marcus.